Good afternoon and welcome to the Channel Final Bell here on the Rural Radio Network. I'm Chad Moyer. On today's program, we welcome in Sue Martin from Ag and Investment at Clarion, Iowa. Sue, thanks for taking the time and joining us on today's program. As we look at the closing numbers here on a Friday, corn is going to settle out, anywhere from 7 to almost 10 cents higher. We've got soybeans in the neighborhood of 13 to 20 cents higher in some of those deferreds. And then even Kansas City wheat got in on the action, a dime higher at the settlements today. We'll talk about some of the specifics and the commodities, but first of all, Sue, just your thought on the day's trade after all the volatility. We end with green on the screen. What do you make of today's trade?
Well, it's kind of nice to see all the green in the markets today as we end this week. But, again, tariffs are on pause. We're seeing countries, Thailand came forward and said that they would put their tariffs on corn imports from the U.S. down to zero. But that's kind of interesting because of the fact that they don't really buy a lot of corn from the U.S. So I'm sure the Trump administration's not going to be totally bowled over by that. But it's a start. And so we've got 90 days of negotiating with all these different countries. Some countries, like Vietnam, has already dropped their tariffs completely to zero. So there's been a few wins. We haven't heard a lot of it yet. And, of course, China went up to 125%. We're at 145%. China has said they won't go any higher because they know the U.S. will just say, okay, fine, we'll go there too. And so now it's going to come back to negotiating. And remember, back in 2018, China banned the imports of beans, and it took nearly 2 years before they said, okay, we'll do phase one. And then, of course, about that time, they realized they had COVID in their country. And they also knew, President Xi knew in June of 20 that the reserves of fennel grain were like basically empty. And it was all because of fraudulent claims by the managers of those various entities. Because they were paid on the amount of grain they had in the storage. And if the grain was going out of condition, they'd move it out, but they would never take it off the books. And so therefore, all of a sudden they realized they were very short-handed on corn. And so Xi kept saying to the people, don't be wasteful, save your scraps. And of course, what he indirectly was saying, we're going to lock you down. And they stayed that way for almost 3 years. So China never did finish their phase one agreement. And I think they have around $85 billion yet to do on that. And I think at the end of the day, that's where they're going to end up back. That China will come back and say, okay, we agreed to do this once. We had COVID. We couldn't do anything for 3 years. Now we'll come back and we'll agree to finish this out. And so they'll look like they've saved their face. And in the meantime, President Trump will say, okay, fine. And he's kind of held their feet to the fire. So, it's going to be interesting. But in the meantime, you've got the Brazilian bean crop harvested, or pretty much all practical purposes, it's harvested. And so weather's not bothering that crop. There's too much rain in Argentina, and the harvest is a little bit slow. They should be around, I want to say normally 7% harvested. They're 3% harvested. A year ago, they were 12% harvested. But all in all, that was because they were so dry a year ago. So I think that this week we have seen huge, and I mean huge, demand by China out of Brazil, and also some in Argentina. And no surprise, when they're coming out of harvest in Brazil, that's usually the best time you can buy it the cheapest. And that is what they're doing. And it was never thought that these tariffs with China on soybeans would really affect the old crop. It's the new crop that they're going to be interested in. In other words, the last quarter of this year. So that is where the concern will end up being. Now, there's been some talk because of what's been going on, and you've got cotton, looking pretty poor. They've had a ton of rain, and so it's thought that cotton acres would shift over to corn. Usually, cotton acres shift into beans. So there's been talk that with everything going on with the strength in the corn market and corn really not feeling like it's vulnerable to the Chinese tariffs, it's thought that, hey, U.S. is number one exporter in the world. Where are they going to go get it? Well, they'll probably have to go to Argentina next. And you've got Brazil looking at pushing their blend to 40%, and a lot of that will come from corn. So that's going to tie down their safrinha corn and make less for export. So the U.S. has got that pedestal, and that's a pedestal we think we keep. And so I think when they thought, okay, China's not going to be buying much corn from us anyway, but the rest of the world, like Europe and what have you, we're good to go. And there's talk out of Chicago that we're going to see at the end of the day, we'll see some bean acres still switch into corn and have another increase in corn acres in the final at the end of June. Maybe, maybe not. Late Easter, late spring, what could that mean? Well, you go to plant the crops and replant out of the South, Arkansas, Tennessee, Kentucky, what have you, and even into Indiana and Ohio. They're wet, and that's also helping the wheat market. But what may happen is they continue to be wet, then all of a sudden we come back, get planted, we get a frost freeze in May. We haven't seen that in quite a few years. That then kind of jacks the chain of us in Iowa and you guys in Nebraska, still fairly dry.
Sue Martin with Ag and Investments there in Clarion, Iowa. We'll take a quick break. We'll come back with the second half of the Channel Final Bell, talk a little bit more about some of the grains and especially livestock side as well. Stay tuned. You're listening to the Channel Final Bell on the Rural Radio Network.
When you're a farmer, tomorrow always brings a new challenge. Unexpected weather, invasive pests, volatile markets, the list goes on. But with the enhanced Channel Seed brand's top-performing products, innovative digital tools, and expanded agronomic support, you can rise to meet them all. Channel Seed, let's rise to the challenge. And catch our new Channel Nebraska podcast on Apple, Spotify, or wherever you get your podcasts. Read and follow pesticide label directions, IRM, grain marketing, and other stewardship practices.
Martin from Ag and Investment at Clarion, Iowa. We talked about the grains there in the first half. Maybe just, if you would, just very quickly, what is the story on wheat today? Because we had double-digit increases on all three of the wheat, Chicago, Minneapolis, Kansas City. Just some quick thoughts on the wheat situation?
Well, technically, our indicators, we have 4 that we've put together, and they seem to accommodate each other very well. And we've had buy signals under this wheat market that have not gone away. And so every time we try to break back, the market catches, bounces back. But we're also into a seasonal time for wheat. Now, not seasonally does that guarantee that it's going to happen again, but it just shows what the pattern has been like other years. And tendency is for wheat to put a high in around mid-March, maybe to the 18th. Then it breaks into the first day or two of April. And then it starts its work of a progress working higher into at least mid-May. And then you turn down into the end of June because of the fact you've got harvest going. So it's kind of like your pre-harvest rally. Well, wheat's into that. But then you have the weather, and the horrible flooding probably is the biggie for Chicago wheat. Then you have cold temperatures coming back, and they've had snow, but next week they're to turn back cold in the northern plains. And then on top of it, you've had the hard red wheat in the southern plains, very dry. And they've already gone through one frost freeze here on last Sunday, but in the meantime, the crop was too small. It's different if you get further into April, and we're now in the middle of April or almost there. And now all of a sudden you're going to start to see the crop show signs of how poor it is and how dry it's been. What it needs is some rain, and there's no rain in the forecast until the end of the month. So that is a concern, and dry dirt freezes. It will not shock us if they come back with another cold frost freeze even in May. So I'm looking at wheat. You've got the Black Sea region, which is Ukraine and Russia. Their wheat is, basically looking pretty good, but here too, they're turning hot and dry. So their crop is going to become concerning. And Russian wheat freight on board offers are continuing to push a little higher. So I think we've got a market that's, I wouldn't sell wheat with wooden nickels. And
before we run out of time, we want to talk about the livestock side of things here too as well. And again, another volatile week in livestock, but green cattle, live cattle, feeder cattle, hogs, all at the end of the week on a Friday. Any thoughts on the livestock trade to round out the week?
Well, we are still lower for the week especially on fats. I'm not sure about August feeders. We might be pushing the chance to be a little higher, but for the fats, we're still on June's. We're still too low. However, I will say this: the market has pushed the cutout pretty hard this week, and the packers have tried to save what they can, and have been bidding down on the fats. However, feedlots are starting to come around and say, okay, we won't place as many cattle. We'll just hold back. Yeah, we'll have cattle here, but less numbers. So they're kind of playing along with the packer and saying, we're calling your bluff. Now, we had been bearish cattle into this break. And we felt, even before all the politics involved, that cattle would break in April off of the March rally. We had a huge outside range month in March, about a $22 range on June fats. And we've taken a chunk of that back. We had timing for early this week on cattle for a low, and we got that. But the market's chattering around. But here's the deal. The cattle now are giving us buy signals, and these are very good buy signals. So what that tells me is that I had always thought we'd break in April, which we're getting or have gotten. I thought we'd come out of it, turn around, maybe trail off into May, take the April low out by ever so little, and maybe we don't do it, but more years than not, in a year of a 5, you will do that, and then we turn strong from there. And I think cattle still have the potential for new highs.
All right. Just as we just got a short amount of time here, about 30 seconds left. If you can look ahead to next week, what are you going to be watching as we get into mid-April?
I think we'll try to rally cattle. I think corn might hit a little bit of a snag here, a little higher on Monday, Sunday night, Monday, and then we maybe fall back. I'd like to see wheat stay strong. It's got reasons. And then the bean market, it might try to push a little further, 1054 is kind of a static point. And so I think the market's kind of pushing. It's got lots of time here. We're looking for July highs on soybeans this year.
All right. As always, great information. Thank you so much for the insight. Again, that's Sue Martin from Ag and Investments. Do remember, trading of commodity futures and options does involve substantial risk of loss. It might not be suitable for all investors. That is today's Channel Final Bell. It's brought to you by Channel and your local seed pros. Here on the Rural Radio Network, Chad Moyer reporting.